Trade Genius.
Hey guys, Philip here with Bob Kudla as always, and welcome to another edition of the Trade Genius podcast. So today, Bob, interesting title, Stealing from Robinhood. So who's doing the stealing? Who's Robinhood? Tell us what this is all about.
Yeah, so Robinhood is the American middle class, maybe even the upper middle class, and definitely the lower class folk. And of those who are stealing is both the sheriff of Nottingham and Prince John are in on it this time. So the Federal Reserve and policymakers, the government essentially are going to collude into trying to drive down the the debt to the GDP over the next 10 to 15 years. And it's known as financial repression, and basically they're going to do it in a number of ways. One is your tax rate's going to increase because you're going to look like you're making more money. This is the fool you in the 70s kind of fool you, where every year you're making more money. They're going to increase the minimum wage. You're like feeling, oh, right, I'm making more money. But the cost of everything you want to buy is going to continue to get slowly more and more out of reach. But it's going to be a boil the frog kind of approach. So they're not going to make it so outlandish that you notice this time, like we've noticed this time. And the other thing they're going to do is B of A CEO just laid it out. You know, they're going to hit you with maintenance fees. They're going to not pay you for your checking and savings accounts, and they're going to charge you higher interest rates because the Fed just moved the Fed funds rate up to probably end around 4.5%. So they get a nifty spread, and if they don't have good credit, they just put it out onto the Federal Reserve's balance sheet, and they collect a nice piece of interest based on us supporting any losses that the Federal Reserve has. And so you're going to have a situation where we talked about this before. A lot of onshoring is going to happen too, Phil. So we're basically the trade around the world is going to break down. China and the Mercantilist countries are in big trouble. The United States is going to onshore more and more things. You saw what they're doing with the chip manufacturers. They basically are kneecapping and decapitating the Chinese from that piece of high tech, and they're going to bring more and more of the value add back into the United States. Jobs are going to be good, pay is going to be good, except that everything's going to cost more. So that's how it's going to work. It's going to look like nominally we're doing well, but realistically, it's going to be we're going to just grind ourselves, into oblivion over the next 10 to 15 years.
Wow.
So that's it's interesting too, because a lot of people talk about, is this 1929 Bob? Is it 1970s Bob? But this is not just my own thinking. These guys were able to encapsulate my feelings on this. Is that financial repression was a 1940s thing. So we came out of the 2008 crisis, kind of like the 30s crisis, and now we're rolling into the 1940s. A lot of war, rumor of war, also supply constraints, and you have now financial repression coming out the other side of it. So we're going to be sliding into more of a 1940s style sell-off, which is maybe like a slow grind down to 35-40% off. And then inflation will kick in over time and slowly rise all the boats, okay? But expenses are going to be. So unless you're able to be really good at saving, you're going to fall behind. So the rich will continue to get richer. But basically, I would say if you're making $150,000 or less, life's going to get a lot more interesting for you.
And then, so as far as investors, what do we do with that coming down the pipe?
Yeah, so I think we're already positioned here at Trade Genius is that, energy, energy, energy. Okay, number one, infrastructure, infrastructure, infrastructure. Number two, this is from Napier. I don't agree with everything he says because he's always said they'll fix climate change. You're not going to fix climate change. I think it's one of the things that's going to go by the wayside. They're going to fix expensive energy, but that doesn't mean renewables don't play a part.
Right.
So, you're going to be looking at onshoring. So automation companies are going to do well. Companies that are going to come back in the United States that are around rebuilding are going to do well, like construction companies. And we'll have some more of these charts over time. I shared with our subscribers actually today some of the things that we're already positioned in personally with myself, and how they could take advantage of it. But for me, it's about energy. Gold and silver are going to play a role because once they figure out this is going to be insidious, You're going to want to protect yourself. Obviously, he doesn't address Bitcoin, but Bitcoin, this is all happening right into the Bitcoin halving, Phil, which is going to be pretty awesome for those who've been waiting for the next move higher. And then anything infrastructure related is going to be great. And domestic. So if you don't live in the United States, you're going to want to look to be on the United States bus, because we don't need the rest of the world, okay? But the rest of the world is going to definitely need us. And I think, defense is going to do well, infrastructure is going to do well, energy is going to do well, and anything that is a hard asset is going to do well over time.
Got it. All right. Well, that's really interesting, and I appreciate the fact that you are bringing that up to everyone here, and for you guys at home listening. Obviously, you can't ignore this. And so I think Bob's laid out a pretty good strategy there for you. Okay. Switching over to the markets, I know a lot of people have questions as far as like what the heck's going on with the market, a lot of volatility. And I know you had a chart that you wanted to share with the folks in regards to how our signals work or our algorithms work. So let's switch on over to that. So explain to the folks here what this is all about.
Yeah, and look, I'm going to kudo my partner here, Phil, on this, is that he basically, Phil and I collaborate on everything, but Phil's able to bring things to life from our collaboration. And so there are two algorithms of ours. You guys don't see this yet, even if you're customers. We're actually going to try to package this up for people. But we have an algorithm that looks at the Fed. That's called our risk on, risk off. And then we have an algorithm that looks at the derivatives market. Okay, and that's scale long, scale short. I think we only have scale long in here for that. And then we have a third algorithm that looks at the momentum, and that's where you see the Discord buying alert, sell alert. Okay, the red dot that you see, if people aren't listening, that's a continuation sell, which is basically saying the moving averages aren't confirming a potential buy area. It's basically saying if you took that trade as a buy, where you see that green vertical line, it means that is likely to fail and considers at best a consolidation. So having said that, if you look left to right, is that you notice that we had a sell right away on the top there. And for us, we'd like to trade SPY on that. You can trade the Qs. VIX used to be a great, UVXY to take that long. I'm not that big of a fan now anymore. They kind of ruined the volatility trades, but SPY and Qs are good enough. And so I put the black arrows there. You can see where we got I think that's a scale long there, if I'm not mistaken, Phil. I can't really see that far away. It's tiny for me. Is that gave you a push up into, you notice the gray bar, that's our range trader. So that's establishing a channel for us based on Fibonacci's and other pieces of information, another one of our proprietary signals. And at the same point, it flashed a sell for us based on momentum of failing. That is a no-brainer put trade, and you would have been paid handsomely for taking that. Then it came a buy signal, but the buy signal came in an environment where it was underneath the Ranger. And so this is one, if you take the trade, you got to really be really careful on your stops. And then that red dot told us that it was going to fail, so you should have flipped it right back short again. And you would have been paid handsomely once again. And then again, we got another long signal, and it's a scale long, and then boom, another trade that would have paid you. And then our momentum signal right again at the Ranger. And this Ranger thing is incredible. That's algorithmically presented for us. We're not in there drawing that line in. Another sell for puts for bank. And then in the midst of everybody saying we're going to collapse, we got a buy signal on our algorithm for the Fed liquidity, and we also then got a continuation buy signal, and that just turned into a great trade. It's a bit of an eye chart, but I sent Phil over my my P&L today. I'm just taking this trade on SPY, and 20 contracts, 10,000 was invested, $6,800 profit in, 12, 14 hours. So if you catch these trades and you believe in the signals, in which we wholeheartedly do, is that you it's a nice way for you to flip long and short. In addition to what we do is that we take these same signals to balance out our credit spreads. So, if we're in an up cycle, we're doing bull spreads. If we're in a bear cycle, we're doing bear spreads. And so we take advantage of these opportunities, and we have a really high, north of 80% win rate on credit spreads. So that's what we do, and that's how we do it. If you want to trade with us, just go to tradelikeagenius.com. We talk about this particular thing in the VIP room. At some point here over the next month or two, we're actually going to bring this into a template, create a professional level for Trade Genius, and then offer that for sale for people that want to trade with really good understanding behind the money that's moving in and out of the markets, because we can see it.
Awesome. Okay, thanks for that. The next thing we're going to do is take a look at the current chart of basically the S&P 500. We'll look at the futures, the E-mini futures, but it's essentially moving along the same way as the SPX index does. So we're going to flip to that chart. What people, it's been very volatile, but one thing that you want to keep in mind here, guys, is that if you look at where I've circled on this chart, and if you're just listening to this audio only, then I would encourage you to probably take a look at the actual YouTube podcast. But essentially, we have these areas where we consolidate, and it's very choppy, and you get these moves that look like they're going to V-reverse, a la the 2021 bull market, but then they come all the way back and roll over, and there's more chop. And then what happens is you finally get this move away from all of this chop, and you get a nice clean trend. It happened up here, and it happened again here in March. So we had basically, if you're listening, back in October, this happened, October to November. This happened in March into April. And the last time that this setup happened was from basically June getting out and up into August. Okay, so it's a similar setup. You can see it pretty plain as day once you circle and identify these areas of what's going on. They make it very confusing, especially on an intraday basis, on what direction to go. And primarily it's because the larger market makers have to fill institutional size orders. So like you look here, we had this little poke below the 200 weekly moving average. That's a classic move by them. All that did there was get all that liquidity that was built up because people had stops under there. Because if you start moving under the 200 weekly moving average, you're thinking, oh, okay, well, here we go, we're dumping. But you have to abandon that idea if we get a quick reversal and get back over it. And that's hard for people to do, but that's essentially what they did. They just came in here and got everybody sideways or left-footed, and then ramped it the other way. And then look what happens. It comes in and it back tests that 200 weekly, and then boom, off to the races. So if you're a bull or have a bull bias, that's exactly the kind of stuff you want to see. A failed breakdown, and then the level test once again as support, and then we make a higher high. Okay, that's textbook technical analysis stuff there. So now we just want to see this move start to migrate out of this chop zone here, out of this circular area. And then we should start to see a more cleaner trend, like something we saw back here from July into August. Now, we kind of knew this area had a good chance of holding for a number of reasons, because a lot of the indicators that we look at, that we go over with Trade Genius and the clients and the newsletter, we're telling you that a lot of things under the hood were getting bullish, okay? And it wasn't really lending itself to an extended move below the 200 weekly moving average. So you have that. You also have some seasonality with midterms. So that's why our lean is that this move continues to build. And, we may still have some shenanigans, but really in this days leading up to the midterm, we should see a pretty good push. That's a very strong probability when it comes to seasonality when you go back and look at all the midterm years. So I wanted to give you guys a little perspective on where we're at, how these markets behave when they base in these patterns. And this is no different than some of the stuff we saw before, these really strong up moves. So just keep that in mind, guys, as you're going forward. And like I said, we expect this to continue to move up over the next couple of weeks. So Bob, do you have anything else to say with regards to the market or anything else?
No, I think you covered it really well. And I think, our viewpoint, unless liquidity drains or we get too giddy, is that our expectation is a general rise into the election in the next 3 weeks, and then we'll take a look from there.
Awesome. All right. Well, guys, that's going to do it for us today. Thanks so much for watching. Bob, thanks again for the insightful information on kind of the macro outlook there over the next few years and how we can basically position ourselves to deal with that. Really appreciate that. All right, guys, thanks a lot. Oh, and please like and subscribe and hit that notification bell. That really helps us out. And please leave us comments below. We'd love to hear from you guys on what you like, what you don't like, or what you'd like us to cover. All right. Thanks again. We'll see you tomorrow.
Trade Genius.